What is up, YouTube? Welcome back to Stocks by the Numbers, and I wanted to do a quick update as per request here, Origin Materials. Unfortunately, there's really not much to say here. Again, this is a company that was decarbonizing materials and recycling them to reuse them, and then they recently announced that they're going into the biofuel sector randomly. Stock's been in this downward channel here, and I just want to show you how I draw some of these trend lines here, because I know some people feel like, oh, I just can't do it, right? You should never say words like that. There's nothing you can't do. There's nothing you can't learn. And as we see here, look, I'm going to this candle, right? Top of the screen, we have the O, the H, the L, the C, the open, the high, the low, the close. So I go the high, 185, as you can see, right side of the screen, 185, boom. Now we connect down to the next top, right? Because I'm going from this top. So now I'm going along the tops. This is going to be our next top here. Bang, right? So this is now our top trend line. And because the stock is constantly rejecting and bouncing down off of this trend line, this is our resistance trend line. This is where the stock is resisting to break through. So then once we break through and close above the resistance, now, quote unquote, the vibe, as people say, it's really bullish momentum, but the vibe, if you will, has changed, and now there's going to be some buying, some rising, some hype back behind the company. Now, we do the opposite here on the bottom end. As you can see, low 118, top of the screen, we go to 118, we click, we drag down across the other bottoms. This is the lowest trend line level, supposedly, that the stock is bouncing off of. So this is now our support trend line. And as you can see, we are in this downward channel, and you can see also that the trend lines are opening and widening as opposed to tightening and coming to a point or an apex, if you will. So this is the opposite of a wedge or a triangle. This is an opening, which is a trumpet, which tells us that it is still kind of undetermined where they want to take this stock. Now, it looks like it had a big chunk down right to that 68 level that I mentioned. Excuse me, 68 cent level that was mentioned. And now you can see it kind of tried to bounce off of that for a couple of days and now finally gained a little momentum. It's up here at almost 79 cents, up about 30% here today. And in my opinion, if it does regain that level, then you may see this, which is about 88 cents, we'll call it, this trend line that was drawn out across the bottoms recently. However, in my opinion, I think the next resistance may come right there at that fib of 84 cents. And then from there, we can try to see where the stock is going to go. It could potentially get back into this range here with the blues, and could even get back up here to the top trend line, maybe of around $1 or the high 90s, potentially. However, we're seeing multiple rejections, again, off of our trend line, staying below the moving average, so I don't really know how much momentum is really going to come into this stock here. That's why I think at 84 cents, I actually think it stops and potentially starts to drop back down again. You can just see, you know, the channel that it's in here, this downward channel. And in my opinion, I'm not exactly sure if I can tell you that it's not going to come like down here to like 55 cents or something, because it very well could. And again, we mentioned that we just have more negative catalysts outweighing the positive catalysts right now, so there really is no reason for it to rally back up and potentially break and go even higher. Now, we mentioned last time that the company, in my opinion anyway, is severely undervalued in the numbers. We're talking about a market cap now of less than 114 million, and the market cap, the book value per share as of last quarter was $2.94. So I can understand as to why a lot of you may just be piling into shares now, just, you know, hoping for that breakout. But in my opinion, it's going, again, to come back down to these earnings here in February. And again, we can see we go back, we had a beat on the top and bottom line, but then they announced that, I don't know, they're going into the biofuels or whatever. Everyone began jumping ship. Then we fast forward and we can see that the company slightly increased its revenue from the quarter before, however, missed estimates by over 50%. And now, this is what I was saying last time. Now estimates have been lowered, and now they're only 13 million. So from that point, I think, in my opinion, is going to determine which direction this stock really moves, right? If this company could kind of come in the ballpark, 11.5, 12 million, 12.2 million, I think that the massacre will stop and it will bottom out. And again, I mean, it could remain flat for another 3 months, but, you know, we fast forward, this is February, so 3 months later, the next quarter would be here in May. So you could say that it could potentially, you know, flatten out and just kind of hang out, and then if this quarter beats, then it explodes up and gets back into the dollars and whatnot. But unfortunately, only time will tell. Again, the biggest problem, just like I said last time, if we just back this up all the way up here, so you can see that, of course, it basically, you know, it dropped down and then it was slowly bleeding down, and then of course they made that announcement. But the main thing I want you guys to take from this is, you know, just because a company IPOs, or just because they're talking about, you know, renewable materials or green energy or something like that, that doesn't mean it's a buy. I need you guys to stop investing like emotionally. There's a difference between excuse me. There's a difference between buying something on speculation based on something we heard about in the rumor mill, as opposed to just buying something because you think or you feel it could be huge. And again, my example goes back to all of those EV stocks. The whole time I was reviewing those stocks saying, you know, listen, you have companies that aren't even making cars, and we have a market cap of like several billion. Like, no, the stock has to go lower. The company is not worth several $billion. That's more of a fact, really, than an opinion, if you think about it. And what happened? Everybody, oh, you don't know what you're talking about, blah, blah, blah. Because everyone bought these EV stocks looking at Tesla. And I do not care what they say, that is what happened. I promise you. They saw what happened with Tesla over the years, and they said, if I get in early here on this EV, it could be the next Tesla, and I can make $1 million off of 300 shares that I'm buying today, and I won't have to worry about money anymore. That is not how it happens. So that's why, just a little disclaimer, in my opinion, if I were you guys, I would start investing smarter again. And what do I mean by that? Well, we've had big success with stocks on our channel like Fubo and Rolls-Royce. Reason being is because the revenue was coming in, the stocks got beaten up, they were now severely undervalued in the numbers, they found their bottoms and have now been climbing significantly. Which again goes back to the Buffett method. We buy brand name stocks at a discount. First of all, obviously, this is not a brand name stock, and I understand, you know, they're new in the space and everything like that. I can appreciate that. But again, just looking at the revenue that the company is bringing in, in my opinion, they're worth about 100, maybe 200 million in market cap. Right? Which means even if we double it, you're talking what, like 130, 140. And you know, and in my opinion, that's like best case scenario. And it's interesting because, again, we looked at the book value, which I believe is $294 a share as of last quarter. But now the problem is, again, as I mentioned, the company basically shot itself in the foot by talking about going into the biofuel sector. Then they recently announced that they're up and running in their Canada facility. But then we see something like this. ORGN to cut 30% of workforce amid realignment. Now, if we go back and we look, where is the revenue? Where is the business? Oh, it's here. May 2023, they made $1.7 million. Okay, that was right here. Which means that all of this was bullshit. This company wasn't, in my opinion, this company wasn't worth your attention until there. See, that's the way I look at a lot of these situations. And again, I'm not necessarily saying this is the best way to look at these situations. I'm just letting you know the way I look at them. And I know a lot of people, they look at a lot of stocks that I said were undervalued that are now climbing in value. We look at a lot of stocks that I said, I think people are crazy and the stock's going to tank to new lows, and then they actually begin dropping down and hitting new 52-week lows, new all-time lows. I don't claim to be a genius. I'm just kind of putting two and two together here, right? So this company's still at this point. May, we're talking what? Where's the stock? About 4 and change, right? So it's like 6 times higher than where we are here. That's what I mean. So the market cap at that point was like 700 million and change, and they finally made 1.7 million. So in my opinion, the stock was overvalued right there at that point. And then of course you have some bad news and we chunked down. But this is why I say I like to follow the revenue, right? Because revenue, again, 1.7, then they come in almost 6.9, they beat estimates. Okay, phenomenal. Obviously, again, they made that announcement that chunked the stock down, but in the numbers, very nice. Now you're supposed to post almost 15 million, you post less than half that. That's an issue. That's an issue. Stock should go lower. I don't care where the book value is or anything like that. Stock should go lower. And now again, this brings me to the next quarter, 13 million. And this is why I'm saying, if this company comes in and posts like 7, 8 million again, I really don't know if it could be held up. And also, the one thing I'm worried about is the fact that the stock is now, consistently trading below $1, so it's only a matter of time before they get that compliance letter from the NASDAQ, which of course is going to be another negative catalyst, which is going to bring the stock lower. And because the company really doesn't have the value to back it up, in my opinion, we may be due for a reverse stock split, which of course, as we learned, could potentially be the beginning of the end for a lot of these stocks. But I brought this up too, the workforce, right? This always amazed me too, right? Because again, we go back here, and this whole time, again, before May 2023, right? Company came out September 2020. September 2020. It took almost 3 years for you to make $1 million. And now, see, now that's what I mean. Now traders and investors are holding their feet to the fire, telling them they have to do something, they have to turn this around. And then what happens? All of a sudden, they're cutting 30% of their workforce. They're trying to, limit the bleeding and increase profitability on the few $1 million that they're making. This, in my opinion, just doesn't seem, it just doesn't seem sustainable, if you will. But this cutting the workforce, that always amazed me, man. So you're telling me for this whole time you had like hundreds or thousands of employees that technically you really didn't need, but you were spending shareholder-raised capital to pay these people a job that you didn't need them there for. And now that the shit's hitting the fan, all of a sudden you're able to just get rid of, 30, 40% of your workforce. So see, this is why... Man, it's hard to explain, but this is why, in my opinion, I stay away from companies like this. I really do. I am already upset at how they're managing this situation, and I'm not even a shareholder. Think about that. If I bought this thing up at $4 or $5, I would be looking for blood. But I don't own it, so it's okay. But I know a lot of you own it, which is why, again, I know, the company, the video got views when I talked about the stock, and you guys are looking for updates and whatnot. But again, let companies like this, just keep them on the watch list, man. I'm telling you, just watch them. Just because it's renewable energy or they're recycling plastics or something, that doesn't mean it's a buy. What makes a stock a buy? A company that is, profitable, hopefully, making more than they spend, But of course, I understand when these companies start out, obviously they're, EPS negative, and it may take a couple of quarters or even a couple of years to get net income positive. That's fine. But also at the same time, during that time frame, the companies that ended up being successful when they started out negative like that, what was the difference? The difference was the revenue was consistently coming in. Because if you're consistently increasing your footprint, your market share, your overall business, and more revenue consistently comes in, then it really should be only a matter of time before you reposition those dollars correctly and take care of all of your expenses, and now your company is turning a profit. So that's why, again, stocks like this, and all of the other stocks that I said, in my opinion, that were overvalued, that slowly began to sell off, like Enovix, Microvision, if you guys had your little short squeeze there, the company, of course, immediately went back down to $2 because it's a piece of crap. Why is it a piece of crap? Well, because they have no revenue coming in, right? I'm not bashing the company. If you own shares, please, I don't want to hear it. I look at numbers. All of these companies, though, Luminar Technologies, another great example. A stock a lot of you are watching, a lot of you may be involved in. I started looking at the stock, it was like 7 and change. Stock just hit new lows of 230. Now, a lot of you may be upset and not understand why, but in my opinion, I knew it was going to go down to the 3s and the 2s, and it was only a matter of time, and there's no urgency, and that's what I mean. That's why, unfortunately, it may take a little bit more time, a little bit more experience for a lot of you guys to start seeing some of these plays the way I see them. But again, show me the proof in the pudding, right? Come out this quarter here on these $13 million estimates and post like 14.2. Then we can say, okay, now we're back in business. This stock may be worth owning here at these levels. But something like this cutting the workforce, man, that always made me laugh, man. And same thing, who was it? It was other EV companies too. Honestly, we looked at so many crappy EV stocks, I can't even keep track of all of them. But I remember it was like something similar, right? Maybe it was like Mullen or something. It was one of those other companies. But it was like the same thing, right? They came out in like 2020. They were massively overvalued. They said they weren't even producing cars for like years down the road, but everyone was hyped about them and buying them. But the stock was in like a 3-year downtrend just because it was overvalued from day one, and they're not bringing any value to sustain that value. And then, after like 3 years of consistent losses, now that shareholders are getting all pissy and jumping down their throat, now what do they say? Oh, we're cutting 20% of our workforce to try to limit loss. It's like, yeah, listen, great move. The problem is you're about 3 years too late, and without even producing vehicles, the fact that you now need to cut your workforce basically tells me that you spent millions of dollars of shareholder capital paying for employees that shouldn't have even been working at your company to begin with. This is what I'm saying. Back in the day, shareholders used to hold companies accountable. And now it's like, oh, it's whatever, they screwed up, the stock went out of business, I lost 10 grand, or whatever, I'm moving on. Like, what? Are you out of your mind? Are you out of your mind? You guys need to start rewarding the good performing companies. Stop looking for the short squeezes in GameStop. You guys, again, you literally saved a company that should have gone out of business. That is more of a fact, in my opinion, really, than an opinion. Again, if you think I'm crazy, I did the video a while back talking about Bed Bath & Beyond, saying that they bring nothing proprietary to the table. What does that mean? Proprietary. That means that their product line, their specific service, that you can only get there. And of course, Bed Bath & Beyond didn't have anything like that. That's why they went out of business. And again, recently when I looked at GameStop, what do they have? Their little pop figures or something. I don't even know if that's exclusive or proprietary. I don't know. It says it was exclusive on the website. But either way, that's not even the lifeline of the business. The lifeline of the business is the video games. It's not the whatever, couple of $100,000 they may make off the figures, you know? Like, yeah, it helps, but the actual lifeline of the business is deteriorating because there's nothing proprietary about GameStop. You do not have to go to GameStop to get these games. And people are now aware of it, which is why GameStop used to make several billion, and now they're just trying to hold on to $1.25 billion in revenue, or whatever the hell the numbers are. Think about the companies that went out of business recently, and you will agree with what I'm saying. I'm telling you. Blockbuster, behind the curve. We moved to the digital age. We can push a button and just get a movie. So who the hell is going to go to Blockbuster and get a card and a membership and go there and you got your late fees and you got to go and get the movie and then bring it back? And no. Boom. Got eaten. Company got eaten. JCPenney, another perfect example. This was a third-party location that sold other people's shit. Well, I could just buy it from the people. What the hell am I going to JCPenney for? The e-commerce age exploded. A lot of brick and mortars went under. But which brick and mortars went under? The ones that have nothing proprietary. Those are the companies you should look for. Now again, I can appreciate the fact something like ORGN Materials may bring something a little bit different to the table. I understand their decarbonization and they're trying to recycle and reuse all these materials. Like, yeah, listen, great story, great story. Until you're actually doing it and beating earnings and growing revenue, you're not worth my energy or attention. That's just my opinion. I would much rather take my hard-earned money and buy something like a Campbell Soup or a Hershey at a discount and wait for that growth, as opposed to, oh, this company might change the world. Right now they suck, but in 5 years it might pay off. You don't have time for that. You work very hard for your money, and your priority should be preserving it and growing it. Not rolling the dice trying to look like some sort of stock genius. Oh yeah, I bought this at 68 cents. Now it's at $7. Those stories are very few and far between, I promise you. And a lot of the people who did become millionaires from like the baby boomer generation and whatnot, all of these people now who are retiring, who may have 1 to 5 million in long-term accounts, it is because they used the compound investing, the DRIP, D-R-I-P, dividend reinvestment program, and for the most part, they bought brand name stocks that were either going to maintain its value or increase in value over the years. Right? So that's what I mean. Companies like this, listen, if you're making good income and you literally have that extra capital to speculate with, fine, go for it. Again, everyone's in a different financial situation. If you're sitting there with like 10, 20 grand that took you years to build up and, you know, you're looking to invest it, let me tell you something. In my opinion, this company shouldn't even be on your watch list, let alone a position. But that's just me. Again, we're all entitled to our own positions. But here, in my opinion, I would look for the 84-cent fib level. And I went off on a tangent, so I don't even remember if we looked at stock charts. But real quick, you can see RSI, again, as we mentioned last time, was well below the benchmark, so we can't use it as an indicator. Mid-Bollinger Band on the daily, 84 cents. That's why I think it's a key level. MACD cross to the upside actually looks like it's potentially flattening and might even curl back to the downside. That's why I'm saying you might see a pop-up to 84 cents and then a rejection coming down. Even if the stock does continue, it'll probably hit this 50-day moving average here of around 97 cents and then reject as it did once and twice right before that. And we'll switch over to the weekly very quickly, and I'll let you guys go. RSI, again, sub 30. It's been sub 30, so we can't use that as an indicator. Right when the MACD crossed, you can see we had some action, some pumping come into the stock, and then it immediately sold off and chunked down to new lows, even though the MACD is still slowly climbing. Stock up now about 2.6% for the week. In my opinion, definitely shouldn't get back to that mid-Bollinger Band, but of course, anything can happen. But again, undervalued in the numbers still if we look at the book value per share. My main concerns, number one, this quarter coming up, this is a key quarter, I would be in wait and see mode, not buy now and hope for better returns. That's me. And of course, what was I just going to say? The reverse stock split, right? So we have to keep an eye out now for that NASDAQ compliance letter. And that's what I mean. This company, if Wall Street continues to beat it up and they don't let it gain any momentum and it just kind of bounces around in this range, then in my opinion, a reverse stock split will most likely have to come in for the company to maintain compliance with NASDAQ listing. And then, of course, as we know, reverse stock splits, again, usually the beginning of the end, or at least the beginning of the next level of volatility and new lows, right? We've seen this, unfortunately. So only time will tell, but quick update here on ORGN. Again, I know it may not be everything you guys wanted to hear, but I'm always going to be honest, and I'm always going to give you my opinion. I'm never going to tell you just what you want to hear so that I can get a like, a view, a share, a sub, or anything like that. Believe it or not, I'm actually here to help. But I'm going to end it there. Once again, stocks by the numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But moving forward, more importantly, like I always say, I understand that markets are rocky and volatile and uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for stopping by. Have a good day.